Welcome to today's explainer. Have you ever stared at your pay stub and just thought, wait, where did all my money go? Or maybe you felt that sheer panic staring at a pile of tax forms in April. Well, if so, you're in exactly the right place. Today, we're taking all the stress and confusion right out of taxes. We're going to demystify the entire tax lifecycle, from the second you get your very first paycheck all the way to filing your return. Try to think of taxes not as some terrifying audit waiting to happen, but simply as a procedural matching game. And in this explainer, we're giving you the exact playbook to solve it, step by step.
So here's our roadmap for today. First, we'll cover the essential forms, the W-2 and 1040. Then we'll tackle the big question, do you actually need to file? After that, we'll master the art of withholding and refunds, and finally, we'll wrap up with how to file smart and stay safe.
All right, let's dive right into part one, essential forms, specifically the W-2 and the 1040.
Okay, so the minute you enter the working world, you get handed a mountain of paperwork, right? And sitting right on top is the Form W-4. You fill this out on day one of a new job. Basically, this document is your way of telling your employer exactly how much federal income tax to hold back from each of your paychecks. Now, if you've just got one job, the default settings usually hit the nail on the head. But, and this is absolutely crucial, if you're juggling, say, two part-time gigs at the same time, you've got to coordinate this carefully. If you don't, both employers might just assume they're your only source of income. They'll end up under-withholding your taxes, and trust me, that sets you up for a really unpleasant surprise later on.
Fast forward to the end of the year. January rolls around, and by the 31st, your employer absolutely must hand you this, the Form W-2. Think of your W-2 as the foundational building block for your entire tax return. It's the official record for both you and the government, showing exactly how much you earned and all the taxes that were already taken out of your paychecks during that previous calendar year. Let's break down what you're actually looking at here. Notice these key boxes. Box 1 shows your total wages that are subject to federal income tax. Box 2 is incredibly important. That's the actual federal income tax they withheld all year. Then you've got boxes 3 and 4 for Social Security, boxes 5 and 6 for Medicare, and if your state has an income tax, boxes 16 and 17 cover the state wages and the state tax withheld. Keep in mind, if you worked multiple jobs throughout the year, you don't just get one of these. You'll receive a separate W-2 from each employer, and you have to combine the wages from all of those W-2s on your final tax return. It's kind of like putting together a giant puzzle.
Moving on to part 2, the golden question. Do you even need to file?
So you've got your W-2s in hand, and you might be facing a pretty massive dilemma, especially if you're a young adult or a part-time student worker. Are you legally required to file? Well, the general rule of thumb is that if your gross income is higher than the standard deduction for your filing status, then yes, it's legally required. Single is the most common status for folks just starting out. So as an example, if you're single and you make over $14,600 in 2024, you must file. If you're married filing jointly, that number jumps up to $29,200, and for head of household, it's $21,900.
But guys, here is a huge warning, and honestly, a big reason why we put this explainer together. Even if your income falls completely below those thresholds, file anyway. Seriously, every single year, countless part-time student workers earn less than the threshold, but they did have federal taxes taken out of their paychecks. Because they figure they don't legally have to file, they just skip it. But filing a return is literally the only way to get that withheld money back. By not filing, you are leaving a refund of maybe $100, $200, or even more just sitting on the table. Rule of thumb, always file if taxes were withheld. Which brings us to part 3, mastering withholding and refunds.
This right here is the main event of the tax season. It's where all your prep and paperwork finally come together. Enter the Form 1040. Officially called the U.S. Individual Income Tax Return, this is your master blueprint. It's the standard federal form where all those numbers from your W-2s are finally calculated. It's where you report your income, claim any deductions or credits, and figure out the exact amount of tax you owe, or the exact refund you're getting back.
Let's see how this builds step by step. The 1040 isn't magic, it's really just a simple checklist. Step 1, you report all your income sources, like the wages from your W-2. Step 2, subtract adjustments to find your adjusted gross income, or AGI. Step 3, take your standard or itemized deductions to shrink that number down to your taxable income. Step 4, apply the tax brackets to calculate your actual tax. Step 5, subtract any tax credits you qualify for. And finally, Step 6, compare the tax you actually owe to the tax you already had withheld.
And that last step brilliantly illustrates the two possible outcomes here. You compare the tax calculated on your 1040 with the tax already withheld, which remember is sitting right there in box 2 of your W-2. Now, if your withholding is greater than the tax you owe, boom, you get a tax refund. The government returns your overpayment. But if your withholding is less than what you owe, well, you have a tax due. You owe additional tax and you'll need to send a payment to the IRS before the filing deadline.
Now, I want to share a concept that totally reframes how we think about tax season. Listen to this. A tax refund is not a gift or a bonus. Getting a large refund means you gave the government an interest-free loan all year. Just let that sink in for a second. Getting a huge check in April feels amazing, for sure, but it's literally just your own money coming back to you. Money that was taken out of your paychecks because you over-withheld on your W-4. In an ideal world, you want your withholding to closely match your actual tax. That way you avoid a massive bill, but you're also not starving your monthly budget just to give the government free use of your cash.
All right, last section, part 4, filing smart and staying safe. So now that we've got the math down, how do we actually submit these forms efficiently and protect our hard-earned money and identity? First off, filing your taxes does not have to cost you money. I really want to reassure you that there are fantastic free filing options out there for eligible individuals. The IRS has free online filing tools, and there are VITA sites, volunteer income tax assistance, that offer free in-person help at places like community centers and libraries. Do yourself a favor and do a quick search for free tax filing at irs.gov before you pay someone else to do it.
Take a look at this number, 94. Back in 2023, the IRS processed over 150 million individual tax returns, and a whopping 94% of those were filed electronically. E-filing is just the overwhelming norm now, and for really good reason. It's way faster, it drastically cuts down on math errors because the software does the calculating for you, and it usually gets your refund directly deposited right into your bank account in 2 weeks or less. So, unless you have a super specific reason to use paper, always e-file.
Finally, we've got to talk about tax scams because every single year, people fall victim to them. Pay really close attention to this list. The IRS will never call you on the phone demanding immediate payment. They will never threaten you with arrest. They will never request payment via gift cards, wire transfers, or cryptocurrency. I mean, no way. And they will never email you asking for your social security number. The IRS communicates primarily by regular mail. If you get a terrifying call demanding urgent payment through weird methods, just hang up. It's a scam. Report it to the Federal Trade Commission.
Which brings us to our final thought for today's explainer. I want you to go look closely at your next pay stub. Are you accidentally giving the government an interest-free loan right now? Check those withholdings. If you're consistently getting a massive refund every spring, you have the power to change that by submitting a new W-4 to your employer at any time. Take control of your paycheck, take control of your taxes, and keep your money working for you all year long. Thanks for hanging out with me for this explainer, and happy learning.